on, everyone? Welcome to the Stock Market Morning Prep video for Tuesday, March the 4th. Crazy day in the markets, that's for sure. Dow Jones down 153, Nasdaq down 30, S&P down 13, almost 14 points, and a Russell down almost 7. And obviously, we all knew that that was due to escalating tensions from Russia and Ukraine over the weekend. But the markets really didn't provide us too much. I want to just show you a 5-minute chart. By the way, I'm not going to go over any indicators this morning because really nothing has changed. Markets are getting extremely volatile here, and the markets are moving quite fast. So if you are new to the game, take a step back, just kind of observe the price action. Remember, I always say cash is a position here. All right, so I wanted just to show you. If you came into Monday short, you did well. But if you did not, you're looking for an opportunity, and there were scattered opportunities on the short side. But pretty much, if you see, we're kind of jumping around here, really not doing much of anything, trying to break this 1838 level, which marks a pretty decent low here. I showed that to you on yesterday's video. But what happened is, and if you look at it, and if you can identify patterns, we had a 5-minute capitulatory low. Boom, big, heavy spike in volume. This is what we're looking at here. And if you can see, this is quite different, this area here from here. We took it down, brought it all the way down to 1832 on one big candle. Heavy volume. Sure enough, that was the low of the day. And then we kind of chopped around, did not do much in the marketplace. Now, interesting developments in the overnight session. Putin had, President Putin had actually said it had called its troops back to the base. And sure enough, here right around 1 o'clock, the markets popped up, risk back on again, and now, as he's speaking, he likes what he's saying. Sure enough, pop back up again, and we are already now back to challenging the highs. This is how crazy this market is, and you have to get a hold of what price action is doing. If you can't get a read, you have to take a step back, otherwise you're going to really harm your account. It's absolutely ludicrous. It's nuts what's going on here. Now the markets are all driven on news. At one point, good news was bad news, good news was good news. So you really have to go through this and just kind of navigate through this whole euphoria of what is driving the markets and what's correlated and what's inversely correlated. So it's really important here, guys, to understand what's driving the markets here. It's not just the ES. So as you can see here now, we are up upper right-hand corner here, almost 20 handles from being down at one point last Thursday at 1817. I'll show that to you in the hourly chart. But I want to show you the monthly chart here. Right now, we are at a major extension from the crash lows to this high, puts us at a 1272 extension. If we close, now this is the beginning of the month, I'll show this to you again at the end of the month. If we have an outside month reversal, and if you do some history, if you look back, you'll see as we get an outside month reversal, the months usually continue to run up. Same thing here if you could look at. But if you do your own work, do your own due diligence. But as I said, if we close outside, I have a funny feeling we could literally continue to move higher here. I know it's crazy, but it's absolutely possible. And with the Fed supporting the market, you cannot fight it. As much as stocks have doubled and tripled almost in price, you cannot, you can't fight the trend here. Do I think that there's something bigger brewing? I think so, but that doesn't mean that we go out and short the market. There's tons of warning signs out there, and the markets continue to avoid that. So there's going to have to be a real big catalyst to move this market much lower. Until then, take the best setups, and remember, you need to be in the same side of the trend. Shorting the market, you probably would have gotten extremely hurt, if not put a big dent into your trading account. So remember, guys, stick with the trend. And I would be looking right now, as we mentioned many times, look to buy pullbacks in quality stocks that have just sold off on an earnings downgrade, an upgrade, whatever the case may be. Anything coming into support, take a look at that. And as a matter of fact, logical pullbacks take profits in certain stocks, and that is still happening in the marketplace. All right, I'm going to run a quick rundown of the markets, but really, again, guys, nothing really has changed. The indicators are just now getting whippy, and I'm not going to bore you with the details. When I see something of importance, I put it in the video. All right, E-mini, that's the monthly. Now take a look at the hourly, and I know it's far-fetched here, but I just want to show you this is what we are dealing with here. This is just a ton of chop. Now remember, that 200 period moving average caught that low, and now we've rallied, and we actually were below it in the pre-market session. Now we're back above it again. Well, that will act as support, and this is a true average here. As once it hits it once or twice and holds, that's going to be a big area of support. So as you can see here, now we're up 1950, and our high is 1866.50. So I would absolutely think that we'd probably challenge the highs today, if not go even higher. And I know it sounds crazy, but remember, do not fight what the trend is telling you, okay? Let's take a look at some of the charts. And again, gold now very bullish. We had bonds very bullish. Now remember, bonds are now getting hit on this risk on immediately. This risk on that came on early morning. So of course bonds are going to get hit on this news. But you see, this to me is continually be a big concern. There's nothing actually supporting what the markets, what the S&P, the U.S. equities are doing, right? When you have all these assets that are doing the opposite of what they should be doing. So that to me is a red flag. Now, can everything go back in sync? Sure. But until then, I'm going to just keep a tight rein on what we're going to be trading here. Take a look at the spiders. As you can see here, spiders dip lower, but we're well above the 200 on the day. 200, the 50, the 20. We're still well above it. We dipped below the 8, but we did hold that. Now it looks like today we're probably going to be challenging highs on all of these indices that we follow. Another big red flag here is the transports. Transports have not gone anywhere. Now, hasn't sold off, but it also hasn't rallied on this little move up. Take a look at the Bollinger Bands. They're starting to tighten here. The good thing about it, it is above the 50, is above the 20, and is above the 8, and above the 200. So it's sitting on support. This could catapult higher. So we'll just see. We'll take it one step at a time. But remember, the markets are made to fool the masses. I keep saying that, and I know it sounds like a broken record, but it really is true, guys. And if you look at here's the IWMs up. Now we were up. I believe it's 16 out of 18 days. Correct me if I'm wrong. Maybe a day or two off. But if you look at this, we're up consistently, and now we're starting to move higher again and to move up again. It's just absolutely crazy. But again, whatever the markets do, you have to take cue on your trading plan. That's where you have to adjust your plan to say, okay, we continue to move higher. I'm only looking to buy pullbacks here. Or you can short, but shorting relative weakness to what the market is absolutely fine. But remember, guys, even that sometimes the markets have this euphoria of just buying dips, buying dips. That's the problem that you have, and then you might be fighting that as well. Qs, take a look at the Qs. Dipped a little bit lower. The only thing that's another red flag for me and is disturbing is semiconductors are starting to sell off a little bit too. I'm going to put on a chart tomorrow on the semiconductors, but it really wasn't too much that really needed to be noticed. But we'll see what happens today. Semiconductors here acting very, very weak. Here's the diamonds, as you can see here. At least it's holding the uptrend line. If the diamonds continue to hold this uptrend line, we're fine here. And then, of course, look at the Bollinger Bands. Let's get these Bollinger Bands tightened. That's going to be building pressure in the marketplace, and we should have another big explosive move one way or the other. As we pick up in volatility, it doesn't tell you which way, but it looks at one point, it's the markets are saying we're going to vacate the area. So now, I don't know which way it's going to go, and especially when the Bollinger Bands are tightened on all the indices, that means pressure is building, and we're going to see a bigger move to come here. So again, keep an eye on these charts and just see where you may think that this market is headed. Right now, we broke back out of gold. Gold is actually, let's see, gold is down a little bit, down $12. Again, to be expected. Risk on, safe haven sectors, currencies should take a little bit of a hit today, as long as we stay elevated in U.S. equities. Here's the OIH. Now, even then, we had a market pull down. Now, I want to show you some of these sectors that I really like here. Look at what the OIH did. Did absolutely nothing. Didn't even move while the markets were in turmoil here. This is a great, great sector. I love the Schlumberger, the Halliburton, the Baker Hughes of the three of the OIH here. Still a fantastic sector to be looking for. Remember now, oil may also sell off, which is down $1.50 today. Obviously, with calming tensions now, tensions calming over in Russia and the Ukraine, obviously oil will take a little bit of a seat back, but I think that's going to create a buying opportunity. So you want to look at these certain sectors to start looking to nibble in. Here's the Schlumberger I just mentioned to you. Pull back a little bit here. Back to the 50-day, maybe base a little bit, might be a good spot to start looking to get long. Here's the oil and gas. I've been showing this to you for several weeks now. Valero, one of my favorites in the oil and gas. Here's Valero, as you can see. Now, again, I don't mean to buy them here, but we need a little bit of a base building, like something like this for 2 or 3 days, and then explode higher. That is a better spot to look to buy. Now, obviously, when markets are weak, so will the banks, but I do like the banks, and I'm going to show that to you in a moment. Just wanted to, I had a thought in the bank sector here I wanted to bring up, but let me just get through the XLE here. Same thing with the XLE. Here's USO, big move higher. Almost hit the target of $38 here. So again, now we're extended. I have no trade in oil. I want to see oil pull back, a decent pullback, get another base building and see where we would go from oil. But again, always on the watch on what oil does. Here is the ETF for home construction. Beautiful move up. We've been showing this to you for several weeks and months. Again, a pullback back to the 50, back into this consolidation area here would be interesting for me to start nibbling in the ITB. Here is the XHB, the home building ETF. Pretty much the same. I don't like trading this one here, but I do like watching it to see where we go. This is my favorite, Lennar. As you can see here, just really starting to explode. Again, a bit extended. We need a pullback. Possibly back to the 20, at least to the 50, but it's going to need some work. And I did mention back in 2013 in December that the home builders, the banks, and solar are going to be 3 big top 3 hits in 2014 in the markets. Pulte Homes, I love the Pulte Homes, and I just want to show you here. KBH, if we can get back into this 18 and change, $19, I'd like to look to buy KBH again and start building a position as long as it holds above the 50. Easy to manage. If it holds above the 50, you stop below 50, and then you would reevaluate it. Okay. And here's the XLF. Again, needs a lot of work here, but watch the banks here. I do like the banks. If you are a type of guy that you like to buy weakness, then you can look at the banks here. But really above this area here, would really entice me to start looking a little bit more. I like to see it either break it back above it or get back just right around that 200 again, and then I would start nibbling in the banks as well. Citibank here really needs to get back above 50. You know what I mean, guys? It's got to get above 50. But I wouldn't look at Citibank at the moment. My favorite is really Goldman Sachs. And as you can see here, J.P. Morgan also coming in. Let me show you Goldman. Goldman hanging nice above the 200, but sandwiched between the 50 and the 20. If it can get back above 167.25, the thing is, the risk reward is better here than the other 2 banks I showed you. Plenty of room to run to at least challenge the highs at 181.25. Okay, so really, this is something I do like. However, it is showing a bearish pattern. That's going to need to alleviate that bearish pattern. What's the pattern? It's a bear flag. Okay, so this is something that needs to get back above 50. So it needs to break back above this this pattern here. Once we get back above it and hold for a couple days, then I think we have some movement to the upside. But until then, to me, this is bearish and needs to break either back below it, and that'll trigger the bear flag, and then I would say next move would be lower here. So let's just keep an eye on certain things, guys. Markets are real tricky here. We're up 20 handles now on the Putin comments. So let's see if we can get some movement, additional movement to the upside. I think we're going to probably at least challenge the highs. But remember, when in doubt, cash is a position. I know I keep saying it, but if if you can't get a good read on the market, take a step back. Believe me, have the guns loaded, because there are going to be plenty of opportunity, as they are right now. Market just needs to calm down and see where we go from here. We are extremely elevated. That does not mean that we can't go higher. We're not be looking to short the market. Let the market do its thing, and if the market does roll over, believe me, you'll get that sell signal where you'll be able to short rallies. At this moment, and I've been stating, even though we had some market weakness, I love to short a rally, but it has to tell me that the markets are going to be ready to be shorted. And even with this down move, it has not, because we've had a down move, we've rallied back up again. We've had a down move. We couldn't get 2 consecutive days lower. That tells me that the market is being bid up. Okay? Just use caution out there. Have a great day. We'll speak to you tomorrow, guys. Take care.